Hey everyone, welcome back to another live trading session with Octa FX. Just a quick audio check. Okay, audio seems to be great. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFD and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. Strategies and charts used in this presentation are for example only. You are reminded that past performance is not indicative for future performance. Okay, so I don't think we need to go through the session guidelines again, but this will be in English. Any questions that you ask, do so in English, and we'll get started. Right off the bat, I think what we need to take a look at is gold. This is something that we need to be prepared for tonight. It depends on your trading strategies, but right now, let me just do a correction for gold, and this is kind of stuck at 61.8% exactly. Let me zoom in so you guys can see it. It's this red dotted lines here. It's at 61.8%. That's 1852. So we are looking at 1850 as a resistance for gold at this point in time. Now, the reason why I say we need to be prepared for it, because in 30 minutes, in 29 minutes, inflation numbers from the US is going to come up. And that's going to create a lot of volatility in the market, because I think this is the first time in the past quarter that we are expecting a weaker inflation. So let me just bring up the numbers, and I'll type it out here. So right now we are looking at core inflation, or sorry, inflation rate year on year, CPI. Year on year. This is different from the month on month. The forecast is between 8.1% to 8.2%. Now, the previous number was at 8.5%. So we are expecting a lower CPI number. If we do see that lower CPI number, then we might see a little bit of a recovery on all the other risk assets out there. We might see the dollar pull back a little bit. Now, technically, right now, a lot of the currency pairs out there are looking or indicating that there could be that potential. We could see a sustained inflation in the US. So if that's the case, if the CPI number come up higher than 8.1% or 8.2%, or if it's above 8.5%, the year-on-year inflation number, which I'll let you know, I'll update you live if that's the case. If we see a number that's above 8.2%, then we might actually see the gold here. It might actually drop. If it goes above 8.5%, then we are likely going to see a strong dollar strength. We are likely going to see the gold here drop, the pound drops, the EURUSD, it might even drop. So that's the thing here. We do have the inflation number. I think it's great that we have the daylight savings right now, that because all these data are coming out at the same time when we're doing these webinars. Okay, so first up, gold. Just be careful, because at this time the rejection is at 61.8%. We are going to talk a little bit about Fibonacci tonight. Hopefully I can fit in some stuff in here to talk about Fibonacci. But right now, if you are planning to go long on gold, be a little bit careful. Right now we might see a little bit of a push lower. And if that data comes up higher than 8.2%, then we are going to see that volatility. If it's above 8.5%, then I think we're definitely going to see a quick sharp drop in gold. Okay, so how do we tackle this for tonight? Right now, if I zoom out a little bit and we talk about divergence for a little bit, it is in a downtrend. Gold is still in a downtrend. This is on the hourly, by the way. And in terms of how the stochastics is forming, this is likely going to be forming a hidden bearish divergence where the stochastics or the oscillator it's posting a new high, a higher high, while price is actually posting a lower high, right? This is basically the scenario that we are looking at here. In terms of preparation, I'm leaning towards a potential for a short. If it does break, you know, if the CPI number does drop, if the CPI drops below 8.1% year on year, then we could see gold spike up a little bit. So there's two, obviously there's always going to be two scenarios, but right now I'm leaning more for a potential, or I'm more prepared for gold to potentially drop because of that hidden bearish divergence that we're picking up on the hourly time frame. If it does, if the number comes up below 8%, then we could see a weaker USD. And if that's the case there, in terms of how far gold could push up, then we are potentially looking at this extension here. Beyond 61.8%, we could be looking at a return towards 1870, 1875 for gold. So yeah, so you got two scenario to be prepared. If you have a position, you kind of have your targets here. But if you're planning to go short, then we could actually draw a new extension. A new Fibonacci. What we're waiting for is an hourly close below 23.6%. So we are looking at. Okay, we'll take a look at Aussie USD in a minute, but let me just prepare you guys for gold because I know a lot of you guys are trading gold right now. Okay, so that's one. So how far Aussie USD makes a correction in this week? Any level should I focus on? Okay, that's one Aussie USD. Aussie USD. Okay, I just got a translation. He wants to know why Mr. Indian Joker Boy. He wants to know why Aussie USD is going higher. Okay, so we'll take a look at that. Yeah, we will take a look at EU. All of this are going to be in hourly time frame. I'm not going to be looking at daily time frame tonight just because we have that inflation number coming out in 20 minutes, 23 minutes to be exact. This is in gold. Right now we're talking about gold. This is XAU USD, right? So in preparation, or what we're looking at right now is that we could be potentially looking for a potential short. If that's the case, if we do have that CPI numbers above 8.5%, let me just write it down here so you guys can all see that. This is really important for those that wants to know how the market is being influenced by the CPI numbers this week. All right, anything greater than 8.2%, that's gonna create a stronger USD. Okay, so when we talk about stronger USD, it could mean that we are going to see a downtrend continuation for GBP USD, XAU USD, Euro USD, and potentially AUD USD, but I'll need to double check on this one. Okay, so that if the CPI number comes out lower than 8%, then we are going to see more of a bullish momentum on riskier assets. Okay, so there. With the current situation, why are we expecting a lower inflation? I'm not expecting a lower inflation, I'll be honest with you. But the consensus right now that we have is that it is a lower inflation number is expected, a lower inflation growth is expected. There's always that risk of the inflation being higher, or at least even better than what the consensus is. So right now the market is positioning for kind of a peak of the inflation rate, right? I mean, inflation has reached its peak. Market is kind of expecting that the inflation number might come in lower. I'm not too um, I'm not too keen on that idea where inflation has peaked yet. So what's going on? Why this number is important is that last week we have the FOMC, right? The FOMC's monetary policy stance was really hawkish. If inflation persists and if it posted above 8.2%, so we're looking at a higher inflation number, then we could see the FOMC being more hawkish. If the inflation number drops, then we could see the FOMC maybe pares back a little bit. They'll still hike rates, but maybe they won't hike 50 basis points. They might just hike 25 basis points. So it really is going to create a lot of volatility in the market. It depends on your skill level. If you're a beginner, there's going to be quite a bit of a volatility that's going to kick in about 20 minutes. So yeah, might be whipsaws in the market. We'll I don't know what's going to happen. Well, we'll look at the market live on this one. Consensus number comes from surveys. So economists and analysts, the surveys going out. This survey is done by Reuters or Bloomberg's. But yeah, those are the surveys. It's collated, and then the average is taken out, and then becomes a consensus. If you guys are wondering what the consensus are, it's not like someone picked up that number and just one guy decide what the consensus is. So yeah, gold go up or down. That's what we're discussing right now. It's in terms of momentum, if we take a look at the stochastics, this is still above 80, so it could go both ways. It's just that right now, I'm a little bit concerned because where it got rejected for the past 3 hours, it's basically the 61.8% Fibonacci retracement on the hourly time frame. Okay, so gold, just be ready for this one. If it does, so it really depends. If you really want to know if gold's going to go up or down, take a look at the notes here. I hope it's clear enough. CPI year on year, we are expecting 8.1 to 8.2%. The previous number was 8.5%. Okay, so I already put out a note there, so maybe take a look at that. If we get anything above 8.2% and we are looking at a stronger USD, less than 8%, we're going to take a look at a weaker USD. Okay, in preparation, let's take a look at EURUSD. There's a lot of volatility going on right now in terms of, I know the range is small, right? But in terms of EURUSD, we're kind of looking at a very similar scenario. In terms of rejection, we are looking at a rejection at 78.6%. Let me zoom in, right? Now, if you're wondering why we're looking at 61.8% or 78.6%, I promised you guys about 2 weeks ago that we're going to take a look at Fibonacci. This is what we call a normal retracement range, right? 38.2 to 61.8%. This is called a normal range. 78.6 is not a normal range, but it's kind of the limit. If it pushes above 78.6, then we could potentially see price continue to push higher towards 127.2% extension, right? So it's kind of the threshold in terms of range or correction. Right now, in terms of EURUSD, stochastics has crossed. The market just gapped down. If you're wondering, it looks a little bit weird because the candle gaps down just now, the past hour. So right now, we are waiting for that data to come out. That data is going to come in 70 minutes. It's best to just wait for the data. It's just best to wait for the number. At times when you're not sure, even if you don't, kind of use fundamentals to trade, it's good to know when these events are coming out. CPI numbers are coming out in 60 minutes right now. So that's what we're waiting for. So during this time, I'm just going to set up stuff. What are the probabilities right now? We are looking at a rejection 78.6%. Stochastics just crossed. We don't have a strong hidden bearish divergence or anything like that on the EURUSD because the EURUSD is actually flat. It's actually sideways. Let me just bring this up on the daily. This is actually still flat. This is actually still in a sideways range, right? But we are preparing ourselves right now. If those numbers comes up, like what I said just now, we could see this happen, and then market pull back down, right? If the inflation number comes up higher, if inflation number goes lower or below 8%, then we could see that move towards 1.06 on the Euro USD. So it's kind of best to just hold off a few minutes, depending. If you don't have a position, don't rush in. If you have a position, then be prepared to start, adjusting your stop losses or protect your positions. Make sure you have your stop losses, because I think there's going to be quite a bit of a movement in the market when the CPI number comes out. Okay, that's Euro USD. In terms of Aussie USD, there was some question about Aussie USD, how far in terms of the correction it's gonna go. We are actually nearing the top of it. We are close to the kind of the upper range of the Ichimoku cloud for resistance. That's going to be, basically, we took a look at 70 cents, right? That was the key number to watch out for. If you follow the outlook on Monday, we got two levels. We got 70 and then we got 69. But let me just bring it up. Okay, so 69, we're still good. Price hasn't closed below 69. But right now, in terms of resistance, price is actually coming back to 70 cents. We don't have a sustained breakout above 70 cents yet. So I know this might be pushing a little bit higher. In terms of Fibonacci, can this be explained? Yes, there's actually an extension here. 161.8 is actually at 70 cents 23. You round that up, it becomes 70 cents 25. So this is not an area for you to start buying Aussie USD, because it's at the upper range of a resistance. If there's a rejection, right? So here's the thing. Why I'm leaning towards a scenario of a potentially higher inflation or a sustained inflation level, because from a technical point of view, we take a look at Euro USD, gold, Aussie USD on the hourly. All of them are a little bit oversold and it's at resistance level. Okay, so in terms of Aussie USD, in terms of correction, is this done? It could potentially, it might not be done. It's just that this is a tough level. We don't really have a sustained close above 70 cents for the day, right? So if we go to the daily, we're not going to be looking at a close above 70 cents. So price could trade around 70 cents, not able to break 70 cents 25, and then it might go back down. So in preparation, make sure you have your oscillators. It could be RSI, it could be stochastics or anything like that. If this one dips below 80, then we could be looking for a potential rejection. Again, it all hinges on the CPI numbers that's going to come out in 12 minutes. Okay, I'm going to go through the questions for a bit. What is your advice for novice traders? Should we pursue currency pairs or try XAU, crude, etc.? For novice traders, I would probably say don't dabble into the commodities yet until you have a good basis or good groundwork on taking a look at currencies. If we take a look at currencies and commodities, let me just remind you, they are two separate asset classes. One is currency, obviously. All right. The other one is commodities. Now, when we talk about commodities, we talk about gold, we talk about oil, right? So if you guys are novice traders, I know a lot of novice traders that jump into the market, they basically got sold on, how volatile gold is, how quick it moves and stuff like that. I don't think it's for beginners, right? You can learn. But I mean, if you're a novice trader, you're just starting out and you jump straight into commodities, they work differently. They're a little bit harder to navigate. So it's actually easier to just trade the currency majors like the pound USD, the euro USD, the dollar yen, Aussie USD. Those are good. If novice traders, I wouldn't even push you into the yen crosses, because there's a lot more volatility on the yen crosses as well. All right, so Aussie USD, we are on the upper end of the Ichimoku cloud resistance. Just be a little bit careful if you're not using Ichimoku cloud or anything like that. That's completely fine. Just take a look at this one here in terms of resistance. This block between 70 cents to 70 cents 25. That's a psychological resistance level. If you take a look at where it was before it slides down, it actually bounces off this level as well. So before it continues to go down. So right now, this area is being tested as a resistance. Now, when we talk about resistance, there are a lot of times when there's not a single level of resistance. There's actually an area or a range of resistance. We call that a cluster. So we're basically in that cluster right now. We are at the resistance area between 70 cents and 70 cents 25. So be a little bit more careful on this one. I'm leaning towards stochastics going down. I'm leaning towards price moving below 70 cents. But again, look, if we don't have that data, I would probably say, yeah, you know what, just do this, whatever not. But we have the CPI numbers, and that's going to come in 10 minutes and 9 now. Okay, so that's what we're waiting for. But if it does drop below 70 cents, then we could be looking at this scenario here. In terms of movement, we are going to be looking at 69.25. I'm not going to be targeting 69 because it's still a strong support there. But if the CPI number comes in lower, inflation number comes in lower, then we could potentially see that break above this resistance. Okay, so be prepared right now. You got 9 minutes to go. If you have any positions right now, maybe start looking at your stop losses, double check your stop losses, because I do expect volatility to kick in. Okay, let me just go through the questions. Still short position on euro. Could you help me with the stop loss? Kind of afraid with the whipsaw. Yeah, the EURUSD, in terms of stop loss, I probably wouldn't have anything higher than 78.6% at this point in time. You could adjust it to maybe closer to 1.0575 if you want to have your stop loss, because if there's a close above 1.0575, then we could see price track higher towards 127.2. But think about it. When we talk about volatility, the spread could widen. Okay, price could spike up, hit your stop loss, and come back down. So maybe give it a bit more room. At this point in time, it's really hard to have anything close or near in terms of stop loss, because the safer one is actually located at 127.2% extension, which is above 1.06 for the Euro USD. But again, right now this is all really data dependent. Really depends on the CPI numbers that's gonna come in very, very soon. Ichimoku Aussie USD is at core 10 state, right? For Aussie USD. Let me just double check. Not yet, because we yeah, it's at core 10, but it's not above the Ichimoku cloud yet. So that's still gonna be a barrier for now. On trading view chart temporary, I don't want to see the next 10 to 12 candle. Yeah, we can talk about that in a minute. We can use bar replay if you want to. How about the impact to stock indices? Right, let's just jump in quickly to stock indices. So when we talk about this one, then this would fall in with the stock indices as well. So The US 30 or Nasdaq 100, that falls into riskier assets. So again, numbers coming out soon in 6 minutes. So we are back here. Let me just make it larger. Okay. So if CPI year on year, it's greater than 8.2%, then we are going to be looking at a stronger USD. We're going to be looking at downtrend continuation for pound USD, XAU USD, Euro USD, Aussie USD, Nasdaq 100, DJIA, US 30. Now let me just bring up Nasdaq. Okay. Here we go. It is very, very choppy right now in terms of Nasdaq. Right now we are at this resistance at the upper end of the Ichimoku cloud as well, just like the Aussie USD. If the inflation number comes in lower than 8%, then we could see a push above that 12,550. But right now it's being kept there by that. If you take a look at how the futures has been going in the past 4 hours, it's actually going slow, right? We are at resistance area. We are going slow because I think market is actually waiting for the inflation numbers to come in. This is for Nasdaq. For the US 30, this is actually inside the Ichimoku cloud. We still have resistance, and if you take a look at the movement in the past 4 hours, it's kind of flat. All right, you can see the candle is really, really small. So a lot of the traders out there right now, they're just waiting for that numbers to come in as well. Futures are waiting for that numbers. Futures would fall under kind of a riskier assets as well. So yeah. Now, if we take a look at the dollar index, this is on the daily, but this is still really nudging at the 104 level 4 minutes ago. Right. The one that we are focusing on is the year on year. The month on month number. Oops. Sorry, where is that? Right, let me just position this here. Right, let me just find that note. Okay. Really sorry, guys, but yeah. I'll type it in again. Or I'll read it out right now. There are two numbers that's going to come in. All right, we got the inflation numbers and we got the core inflation numbers. We got the year on year, and then we got the month on month. The focus would be at the year on year. This is what the FOMC is using as a guideline. This is called the headline inflation number. The month on month, it's there. If you want to know the consensus, the previous gain month on month was 1.2%. The consensus was for 0.2% to 0.3%. This is lower than last month in terms of growth. The core inflation number month on month expected to come in a little bit higher, 0.4% to 0.5% versus 0.3% the previous month. So yes, there are actually two numbers, month on month and year on year, but we are going to be focusing on the year on year numbers. Anyway, let me just bring this up before the news comes up. That's what you need to be prepared for. Yeah, we are going to talk about Fibonacci retracement once the number comes up, depending on the condition. But in terms of Fibonacci, there are retracements and extension level. All of this right now are in a retracement. Right now, it's testing the retracement level, right? Just a quick one. If market corrects itself to 38.2% and 61.8%, then we call this a normal retracement range. But this one has gone beyond that at 78.6%. Right. So yeah, numbers coming out any minutes now. Yeah, when we say riskier asset, it might mean coin as well. CPI core CPI number is CPI number X auto and oil. So it's excluding automobiles and gas prices. Okay, just waiting for that number to come in. But let's pick one to focus on. We might take a look at gold and euro. Actually, gold and pound USD actually, but there we go. So it's dropping. Year-on-year inflation 6.2%. Sorry, I was reading it wrong. Yeah, core inflation number is 6.2% expected. The inflation number year-on-year is actually 8.3%. So that's in line that we saw a sustained inflation level above. Well, it's not lower than the consensus, or at consensus it is actually still higher than consensus. So yeah, we have a sustained inflation level. Core inflation is at 6.2%. The inflation rate is at 8.3%. So headline inflation is at 8.3% year on year. It's lower than last month, so we might say that it could have peaked, but it still comes in higher than consensus. So this is still higher than consensus, means it's the number is better than expected, but it's below. So what we're going to be looking at right now in the market is that we are looking at a stronger USD, but this might not last because it is still lower than last month's year-on-year inflation number. So last month we got 8.5 as a headline. This month we got 8.3%. So initial reaction is that the news is better than expected. It's better than forecast. So that's why you see that spike there just now on the gold and Euro USD. We might see that on Aussie USD as well. So yeah, we haven't got time to go into pound USD, but you can see the same kick that happened. So maybe this could be something that you just picked up in terms of how we read the CPI numbers, what the market is expecting, how we can anticipate it by using technicals. That's why I said I was leaning to more of a sustained inflation. I don't think the number was going to be lower, and it seems to be correct. The number comes in at 8.3%. So yeah, right now, that's how it is. So the difference between CPI and core CPI, as I said, core CPI is CPI excluding auto and gas prices. Okay. So let's go around. If you guys catch that, then great. If you have a position, then that's great. But right now, let's talk about Fibonacci. Yeah. So we highlight that. There's a lot of reasons to think that there's still resistance here. Number one. Is that this was the previous support cluster. This has become a resistance cluster. So if you're wondering where I'm getting all this resistance area, you guys can see that. It just highlights perfectly. In terms of if you don't use Ichimoku, if you're new and you're not familiar with Ichimoku, we are looking at psychological resistance at 70 cents and 70 cents 25. We're using this cluster as a resistance area. We are also looking at the stochastics crossing down. If this one goes down, in terms of how far this one can go, we do have support at 69, right? But if you want to go more than 69, we could actually draw an extension. The 127.2 is actually at 68.83. It's just slightly below 69. But yeah. So anyway, don't get too happy on the whole kick right now, because let me remind you, the number is still lower than last month. Last month was 8.5%. The headline number was 8.5%. This month, the number that just came in was 8.3%. It does show signs that inflation could have peaked last month. Inflation could continue to go down, or starts to go down from this month onward. you know, the FOMC could take a cue at this, or then they could say, okay, we got a sustained inflation above 8%, slightly lower, but still sustainable above 8%. I think the threshold was actually at 6.5%, but it is lower than last month. Higher than expected. So this is how we look at the numbers. It's higher than expected, right? The expected number is the consensus number. It's higher than expected, but it's lower than last month's number. So we might see a quick move, but when the US market kicks off tonight, or when Bostic speaks today as well, because we got Bostic coming in at in about 4 hours to 3.5 hours time. Any comments regarding on how they're gonna be hiking rate next month? You know, is it gonna be 25 basis points or 50 basis points? You know, we could get some hint from that. So market could turn around, depending on, it could turn around or continue to drop significantly when Bostic speaks. And Bostic is a voting member as well, so what he says matters. You're welcome. Okay. So let's go through. We got requests for Euro AUD. I think we can take a look at Euro AUD. Euro is actually really strong right now. It hasn't really, unlike the pound USD, right? It doesn't drop below that 1.05 level, so it's actually sustainable at 1.05. Now, in terms of how far this goes down, I think we are actually reaching extension level, right? We could go down to that 161.8%. That's located at 1.04950, just slightly below 1.05. But right now, if you are looking for support to come in for the Euro USD, it would come in at 1.05. We definitely won't have 75 basis points. That was mentioned during the press conference. The Fed's not going to go with 75 basis points. They are going to go with 50 or 25 basis points. So yeah, I think 75 basis points was ruled out last week during the press conference. We're not going to be looking at 75 basis points for the FOMC hike. In terms of how aggressive they are, I think the max is just going to be at 50. Okay. So yeah, if you have a position on Euro USD, you might be figuring out, you know, what your target level is. The hourly does suggest there's going to be support coming in at 1.05, and we're very close to that. So if you have a short position in Euro USD, might be time to think about scaling out or maybe getting out of the positions, because if it's unable to break below 1.05, then we could see price just hover around 1.05 like this, like what it's been doing in the past since last week. It's in your favor, right? You wish short Euro USD. So you know, in terms of stop losses, sorry, what's going on? I'm trying to delete this. Okay, so yeah, if you have a short position right now, you might want to move your stops to just below this low here, about below 1.0525, and just let it run. But make sure you have a target. Is it time for this one to break below 1.05? It could be, but it really depends. We need an hourly close below 1.05 for us to confirm it. Okay, so volatility hasn't went off. It's not gone yet. I think the market's still moving around. How's your spread, guys? Was it big? By the way, with gold, we are likely going to be looking at an extension right now. That's going to overlap at 1825. Now, if you see the Fibonacci, that's overlapping with the daily one, I believe, at 127.2%. Okay, so let me just recap. Anything greater than 8.2%, we got a stronger USD. That's basically what happened. We have 8.3%. We got downtrend continuation for pound USD, gold, euro USD, Aussie USD. We haven't checked on Nasdaq and US30, but I would assume it's the same drop. Yeah, see that? So hopefully you guys get something out of this, because it's not very often that we get a high impact news during our webinar, and I think this is actually one of the first few where we have the inflation number during our webinar, and this is one of the most watched data for the week. So in terms of volatility, I think we are looking at it right now. If you want to see a volatile market, we are looking at that right now. So yeah, Nasdaq Nasdaq and US30 should be about the same. Nasdaq should be worse than US30, but it will be about the same, right? So let's talk about fibs, because I think there's a fib here that we can line up. We got 61.8 and 78.6%. When retracement comes in at 61.8 and 78.6%, you need to be extremely careful, because this is, when we talk about retracement level, this is the level where it's very hard for the market to break through and reverse, because anything above 78.6 could mean a trend reversal. That's why when we take a look at continuation, we kind of look at, potential move towards 61.8%, and that's where the continuation might happen. The second thing that could help out on kind of, taking a look at the potential of what market is thinking is the stochastics. We got a momentum here crossing over. That's going to give you a good indication on how far the market's going to go today. Now, in 1 hour, it's going to drop like this. In 20 minutes, if it does close like this, the stochastic is going to cross. Then we actually have a lot of momentum to go to the downside for the rest of the day. I think the media right now, if you're watching CNBC or Bloomberg, I think they're probably yapping about sustained inflation right now. I don't have the TV on or anything like that. But that's what the media is likely going to report on the CPI numbers. It's like, oh yeah, it's 8.3% better than expected. Sustained inflation is happening in the market, blah, 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 right? That's basically what the market's viewing. Okay, good. Right. What else is there? I want to talk a little bit about Bitcoin. So this is also riskier assets. I have actually prepped this. There was a question at the beginning of the session why I think I mentioned this before, I was waiting for something to happen in May. What I'm waiting for is that whether or not we have a bounce of 30,000 in May. Because if you take a look at this, where market bounces off last year, that was actually in May. That was the beginning of where the base of 30,000 starting to form, right? We are now at 30,000. This is a critical level. Are we going to see a bounce off this level this month? Or are we going to break below 30,000? Because it will change the whole thing. Let me zoom out a little bit, because if we break below 30,000, that will kind of end the whole uptrend that was hyped up about in terms of coin. Now, in terms of timing, it is 1 year to the May low that kind of base, the 30,000 base was actually formed. So we are actually at that level right now. This is what I was talking about when I say, okay, I'm waiting for something in May for Bitcoin on crypto market. I want to see Bitcoin bounces off 30,000, because if we see that bounce, then it's good. But if we break below 30,000 this month, then we could get dragged on even more. You're welcome. Okay, so did you guys pick that up before we go on to, because we got about 15 minutes to go, but I want to talk a little bit about Fibonacci if you guys don't mind. You got any positions that you want me to take a look at? Feel free to type it in before I move on. But did you guys pick that up? How we look at CPI numbers, how we prepare for that CPI numbers, how we use that 30 minutes to prepare ourselves on what the expectations are in the market? Because it's not just by coincidence, because technical measures the sentiment in the market as well. So there's a lot of people that are thinking like what I'm thinking as well, that I think we're going to be looking at a sustained inflation number. So we could use that, kind of get a clue on what the consensus is going to be, or the number for the inflation number that it's going to be, right? That's why I created the scenario where it posted above 8.2%. We're going to be looking at a stronger USD. Anything below that, then the other way around. That's great. Okay, so hopefully you guys picked that up. That's how we navigate through these events. In terms of the economic calendar, I don't think we have anything major today except for the Bostic speech. We got UK GDP growth rate tomorrow, and then the US PPI numbers tomorrow, and then inflation numbers from the Eurozone, I believe so, from France on Friday. But I don't think we have the Eurozone number on Friday yet. So yeah, tomorrow we got the GDP numbers, and then same time tomorrow as like right now we got the PPI numbers. So I think we are looking at the market kind of kicking off right now because they're starting to realize that the CPI number is actually lower than last year. So here we go. For those that were short right now, this is how we look at the whipsaw developing. This is on the 5 minutes. You are going to be able to pick this up on the 5 minutes. On the 5 minutes, this is for gold. This is likely going to come back up to 1850, potentially going back up to 1850 again. But we'll see what happens here. Right, we got 50 minutes, about 40 minutes to go before the end of the hour. So this is the tail end on the hourly time frame. We could see that spike down. Market could pull back up. But in terms of target, I've drawn that at 1840, right? That was at 61.8%. So let's talk about Fibs. Why do I pick 1840, right, or 78.6%? But I'm not going, anything lower than that. I'm not going 1820 or anything like that. I was highlighting 1840. First of all, because that's going to be your first support level. When we come to Fibonacci's, we go from swing high to swing lows, or swing low to swing high, right? Sorry, this is B. So we got AB. From point A to point B, you're going to get point C, basically. The first point C is going to be 61.8% or 78.6%. As I said, this is the limit of a normal correction. Okay, the normal correction itself, it's actually going to be between 38.2 to 50%. Right, let me just change the color. So this is 38.2% to 61.8%. Normal correction, normal retracement, I'm sorry. Okay, those are going to be a normal retracement level. So if you're using Fibonacci to define your target, make sure the first one's going to be 61.8%. Then beyond that, we could go on. Now, if you have a short position on gold just now, it's actually time to move your stop loss to break even. Once the hourly time frame close, we're going to move our stop loss to 61.8%. We're going to change our target to 127.2%. Okay, because right now the momentum does suggest that we might be able to see that movement towards 1825. But we're going to see some people getting off the train, people profit taking at the retracement levels. Normally at 61.8%. 78.6% is the limit. If the hourly close below 78.6%, then yeah, we are going to be looking at a move towards 1825 for gold here. So I'm using gold as an example. I don't normally use gold as an example. It's just that when I was preparing for tonight's session, I was looking at the market, and then I look at gold. I think this is probably the clearest turnaround in the market that we can pick off and learn about the inflation number, one. Now, the second one is that we could actually look at Fibonacci retracement level as well. So we got AB. This is the new fib. Before that, we have this one here, right? And if I get rid of it, what you see where point B is, that's basically around 61.8%. So we kind of know that, yeah, there's still potential downtrend continuation because market created retracement. Then we are going to be looking at an extension for that. So the logic is this. You guys probably heard of this. It's called the ABCD pattern. So we got A, B, C. The extension at 1825 is actually a D, right? That's basically what it is. So you guys probably seen this ABCD pattern. See how the market moved. That's basically what how the market moved anyway. Okay. So the point is, once we got A, B, we can predict where C is going to be. If C does get rejected at a retracement level because C is not higher than A, then we have a D as an extension. And how we measure that is that we can use fibs to measure it. So A to B, we get C. C is at 61.8%. All we need to do is just flip the Fibonacci around and we basically get D. Okay, hope this makes sense. For those that are wondering what's the logic between the whole Fibonacci, that's it's basically this. And you guys probably heard of ABCD patterns. No, the golden ratio is actually 61.8%. 78.6% is I need to pull up the number, but I'll give you a slide next week. So jump in next week, and I'll give you the slide on where we got the Fibonacci rate numbers, because there are some numbers that are not Fibonacci numbers. 50% is not, 100% is not, 200% is not. So yeah, golden ratio is 61.8%. 161.8% is what do you call it? Conjunct. I'll have the slides prepared for next week. I'll show it to you guys. But no, 78.6% is not. But if price does breaks above beyond 78.6%, then we could see a trend continue. So 78.6% is kind of the limit. If the retracement is going to happen, the limit is 78.6%. If it goes beyond 78.6%, then we're definitely going to be looking at, sorry, not definitely, there's a high percentage we're going to be looking at 100 and then 127.2% extension. Yeah, so like this one, the reason why I take gold as an example is that because we have a clear one to take a look at. Right, so like EURUSD right now, it's tracking lower, it's below 1.0525. Take a look at what price does right now at 127.2% extension. People are actually getting out of the positions. So we are actually looking at the market struggling to push down lower. The next one that's going to come is at 161.8. That's at 1.05. We could potentially see market push back a little bit. Is it going to break lower? I don't know yet. But let me just a refresher for those that needs it. Let's take a look at gold. Right? So it's clear. We don't have anything. First, that's how we define where a resistance is. You see how there's no hourly close above that 61.8%. So that's where we need to be careful, because this is not, it's not like, you know, it pokes once and then it just reverses. It's been poking that 61.8% for the past 3 hours. That's why I say, you know, just be careful about that, because it's at 61.8%. Now, if I pull this back a little bit, it's not just a coincidence, but look at that. It was actually the support area as well. So this is support area being tested as a resistance. So you got reason 1, Fibonacci retracement. Reason 2, this was the previous support level. So yeah, that's kind of an indication of where we might need to be careful. Now, in terms of where we are right now, it's clear. You got our resistance. That's 61.8%. It's also at 1850. So if I 1852, but if we round it up, it's going to be at 1850, right? It's a psychological price level as well. So there's a lot of reasons to take a look at that level and why we need to be careful about that level, right? That's one. So when it got rejected at 61.8%, when we start the session, I said I'm leaning more towards going short, right? Because I think sustained inflation is basically going to be, it could potentially come up higher than expected. The numbers could be higher than expected. We got higher than 8.2%. We got 8.3%. Okay, so that's one. So we got 3 reasons to figure that out. So it's not just looking at 61.8% and then we just say, oh yeah, that's a retracement level. There should be other reasons beyond that, behind that reasoning. Okay, it was previous support, now being tested as resistance, psychological price level. And then, I always have my momentum with me. I always have this. And I mentioned just now, stochastics was posting a higher high. In terms of price, it's actually posting a lower high. So we have a hidden bearish divergence. That's reason number 4. To assume that I need to be prepared to go short on gold, EURUSD, and stuff, because not just one asset is showing it. We got a commodity that's showing it. We got the EURUSD, Aussie USD, and Pound USD that's showing the same pattern. So that's where we start weighing our probabilities on stuff, right? So in terms of using Fibonacci, it might seem magical, but there should be other things behind it. There's a lot more than just looking at a retracement level and assuming, yeah, that's where it's going to end. It doesn't work that way because we need other tools to confirm what we see, and that's basically how using Fibonacci correctly is. I think next week I'll post out a slide on how we get the numbers the percentage from Fibonacci sequence. I'll talk about that next week. So those that are new to Fibonacci, you have a reason to know what is 23.6. Why do we use 23.6? Why do we use 38.2? Why do we use 61.8 and stuff like that? I'll talk about that next week because I think we're running out of time for this week. Okay. Well, with the inflation number like that, is there possibility of a sideways market condition, at least in hourly and 4 hourly, depending on the market that you're looking at? For EURUSD, yes, because here's the thing. See where this is bouncing off 127.2. Here's the thing, right? Let me just bring this up again. Are we done with gold? I think we're done with gold. If you're trading intraday, I think you need to be done with this. If you're holding on your position, make sure your stop loss, you move it to break even at least. And if you want to let it run, it's up to you. But in terms of the trade that we take a look at, I think we are quite done. So yeah, where's that? Did I delete? There we go. Sorry. So let's focus on this one. The previous number is 8.5%, right? Actual published number this month, 8.3% this month. So we are actually looking at a lower inflation. So year-on-year inflation has actually gone down from 8.5% to 8.3%. So right now the mood in the market is that, yeah, it's sustained inflation and stuff like that. But as the day goes on, people are going to take a look at this. They're going to digest this number, and they'll start thinking that, okay, 8.5% last month year on year, and then we got 8.3% year on year this month. Inflation might have peaked. We might see a little bit of a decrease in inflation numbers. So it'll depend on the sentiment in the market. If the market is spooked like what it is right now, This should have gone quicker, right? But right now we are seeing that tail end in the market. You're not going to be able to see that if you're looking at the 1 hour time frame, but if you go into the 5 minutes time frame, you're going to be able to pick up where this tail end is, because the movement on the 5 minutes is actually starting to go flat. Support is being built right now. So depending on what kind of traders you are, depending on what time frame you're looking at, you might be able to pick this up. You might be able to see that this is actually a noise in the market. So there's actually a little bit of a noise right now. That's why I say volatility is coming, right? So market just closed the hour. If you take a look at the hourly time frame, just waiting for it to load. There we go. So it's looking bad, right? It does look bad, but if we go by the Fibonacci, it's actually bouncing off 78.6%. You guys see that? It's actually not closing below 78.6%. So if it closes below 78.6%, then yeah, that's where we get more confidence that this is likely going to go to 1825 and so forth. But we'll talk about Fibonacci a little bit more detail next week. I don't think we have, let me just double check for next week. I don't think we have high impact numbers, hopefully, during our session next week. Yeah, we can talk about Fibonacci in more details next week. We don't have high impact numbers coming out during our webinar. Is this a clue for Japanese yen pairs? Not quite. In terms of Aussie yen, I think we talked about this one last week. Did you guys get it when we talk about the potential of this creating a head and shoulder pattern? I think I discussed this last week. On the Aussie yen. So yeah, is it time? No, I don't think it's time yet. Right now, it's at support. Let me just take Aussie yen for example, because we're running out of time. It's at support cluster at between 90 and 91. This is if you go through the outlook 2 weeks ago, this was the level that I've talked about, and that's still in play right now for Aussie yen, just as a guideline. Okay. Trade with stochastic 833 in 50 minutes, and for hourly we target on 61.8%. What do you think? I think it's okay. In terms of stochastic settings, it's up to you. I'm using 1455. 833 is fine. It's just a little bit choppy. There's a little bit more noise to it, but it depends. If you're used to it, stick to it. 4 hour and 50 minutes should be okay. It should be okay if you're trading that. But I think if you're trading on the 50 minutes, you need to be looking at the hourly trend. That will give you a much better guidance as well. Okay, so I think that's all the time we have for tonight. We're gonna continue on Fibonacci next week. So let's talk more on Fibonacci next week. Let's use the session next week to talk more about Fibonacci. But yeah, I mean, if you've got friends that wants to know more about Fibonacci, we are going to talk about Fibonacci next week. So let's make next week a Fibonacci session. We'll use that time to talk about Fibonacci. That way, going forward, I can refer to that session next week to, if you guys want a refresher, then we can use next week's session as one. Okay? All right, guys, good luck with your trades. Hopefully tonight's session has been useful to you. Hopefully you picked up something in terms of figuring out what the key events are, how we look at the fundamental side of things, and how it impacts the market immediately. Hopefully you picked something up from that. Other than that, good luck with your trades.